So there was, I think, I don't know how to describe it, but a little bit of an undertone that I didn't love in the Fed analysis today, in the Fed statement. So let me just go through it, and then I'll give you my take on it. So first and foremost, obviously there was no rate change. There was no rate change to be expected by the Fed. And then they go on to say if the economy continues to progress, they'll be looking to do taper. So today was basically the first time they announced that they're going to consider doing taper. It's been in the works for a while, but now it's going to be happening. It's interesting that they picked this time to do it, though, because based on the Fed's own admission, their GDP forecast was lowered from 7%, which they had raised in June, now down to 5.9%, but they upped their 2022 expectation by 0.5% to 3.8%. And then, of course, their longer-term growth rate for GDP is substantially lower, which is not good. You know, they're looking for substantial further progress for a recovery, and instead they're getting substantial further progress to the downside. By 2023, they're seeing it at 2.5. By 2024, 2%, and then their long-run rate is down to that stall speed 1.8%. So you see growth slowing, and they actually are seeing inflation moderating, and unemployment isn't picking up so well. It was they're upping their forecast for unemployment to 4.8% from 4.5%. So now there are, however, 9 members who want to taper, as opposed to 7 from the last read, and then they're saying they're seeing hikes likely by 2022. The Fed then goes on in their presser to say that they're going to continue to support the recovery until it's complete. They said that COVID slowed the recovery. But here's my question. What happens if we get another surge of COVID? We saw some in the summer, and now they're saying, oh, you know, the Delta variant is peaking or what have you, but we have the Mu variant and God knows what other variants. We have a pretty wide open border, so it wouldn't surprise me if more people came in with COVID. I mean, just the Haiti situation alone, they're under 1% vaccination. So I would imagine we're coming into cold and flu season, so why wouldn't COVID continue to go up and suppose it down? That is going to further slow the recovery. They talked about household spending being good, but moderating, particularly in travel and leisure because of the uptick in COVID. They talked about the semiconductor shortage leading to auto production slowdowns. He said labor is in demand, but that's also slowing. They talked about their growth projections lowered as inflation is running above projections. But here's the question. If they're starting to see inflation come in and growth come in, that's stagflation. So it doesn't make sense to me that if the Fed is looking to keep growth going or boost or support the recovery, why they'd be choking it off now once it's sort of starting to slow. You'd think, if anything, they'd want to beef it up now more. So let's see. I'm just going through my notes here. I was going to talk about the Fed numbers here. So I talked about the GDP forecasts coming in from their June projections. The unemployment rate is lowering, but Powell has now given us a little bit of a critical tip-off. The Fed has basically said they want to get unemployment back to the pre-pandemic levels, and we know they're woke now, so they're particularly looking at minority unemployment. And I think what he was saying now is that they're not going to wait until the 3.5%, but they're kind of looking to be somewhere halfway in between, and we're roughly there. So Powell left a little bit of room potentially for wanting to see some more data. I guess they kind of get a free look at it in October. But my concern is if the Fed, and he kind of made it sound as if they might even hike in November. So he said that he thinks substantial further progress has been made in both inflation. There's a few members who think it may not in employment, and I guess they're wanting to appease those people also, so maybe they could have a unanimous or near unanimous ability to pull the trigger, because if they're doing it at 50-50, that isn't exactly giving a lot of confidence, and I think they want to come in sort of all lined up and say, okay, we all pretty much are on board with this. So I think that's the reason for the hesitation. And I also wouldn't discount the fact that the Fed, and now even Chair Powell, is caught up in this owning assets that the Fed was buying. So I think the Fed didn't want to announce taper fully today. I mean, they're announcing it's coming down the road because people like myself would accuse them of insider trading. You know, you're liquidating your assets near the top of the market. So there's that. I think they're also trying to keep people under the impression that there's not going to be rate hikes immediately as soon as they taper. And I think Powell did a decent job of conveying that today. But I have to tell you, there were some points during the presser with the Q&A where it sounded to me as if Powell was kind of ready to raise rates. Not raise rates, but ready to taper, pretty soon. And I thought there was a little bit more of a hawkish undertone as opposed to when we just heard Powell recently. It's sort of like which Powell you're going to get on any given day. Some days he slips and is sounding a little more hawkish, and on other days he's sounding a little bit more dovish. So I think today was sort of that little bit more hawkish tip, and I think the market kind of caught a little wind to that, and that's why it was a little weak toward the end of the day. So that's my take. I think the Fed was incrementally a little bit more hawkish, and I think initially with their statement, which the Fed, if you read it and you took it just at first blush, was a little bit more dovish, but then Powell kind of stepped in and made it sound a little bit more hawkish. I'm looking at our sentiment gauge, our proprietary sentiment gauge, and it's roughly where it was in the last video. I think that you saw a little bit of the bears move to the sidelines, meaning I think they got squeezed, and maybe a little bit of an upping in the bulls, which I don't view as positive. So here's the kind of what now. We had this kind of big gap down on Monday. The market had already been kind of sliding last Wednesday, Thursday. I mean, there were recoveries, and then Friday was weak. And then Monday broke trend, and the last couple of days, I mean, if you look at today's high of day, we checked back to the backside of trend, and the 100 MA has roughly held. So the question we're going to ask is what now? And I kept on having people ask me today, is it safe to buy? What do we do? Are we going to short? And I think the answer is this, and I've traded the Fed day ranges for quite some time, and I'm going to go into some more detail on that in my midweek video, which I'm going to shoot shortly after wrapping this video up here. But in general, I like to look at the Fed day range almost like an earnings day on stocks. And I think that the trick here is going to be long above the Fed day range for a continued move up to the gap fill at, I'm looking at SPY right now, would be 441.02. And maybe an overshoot to the 50-day moving average at 442.71, and then we'll see what happens. If bulls are able to continue ramping through there, then I'm going to be thinking 20 MA up at 446.84. So we go from level to level, and then we do analysis at that point. Oddly enough, right now where we closed is roughly around the 714 candle breakout, and I'll illustrate this more clearly in my midweek video where you can see the charts. But I would say if we lost the low of day today of the Fed, which is 433.75, and if you want to be a little tighter, you could use the candle body low, which is in like 436, let's say 436ish. Anything below there to me gets a little bit more bearish, and I would say if we bounced off the 100 MA and then couldn't get the 50-day, because what usually happens is we go from MA to MA, right? We lost the 20, we got the 50. We lost the 50, we got the 100. We held the 100, we should see the 50. So if we can't even get to the 50, I think then we're coming back down for that 200 MA test down to 410s. It may be incremental. There's likely some support in the 420, 421s, 422s, and then maybe around 417s, but ultimately I think we would see the 200 MA if the 100 MA is lost again. Now, if we continue to hold the 100 MA, and we could be caught in a scenario where we're bobbing around between the 50 and 100 MA for a while, and I would look at that as sort of like the flat market scenario. So I think that for the bears to really step up, they need to incrementally do this. They need to take out the Fed day low, take out the 100 MA, take out Monday's low, and then we're going down to the 200 MA. I guess you could look at the last 2 days as look aboves and fails of the Monday range if we lose the Wednesday low, and I'd be targeting that 428.85, which was the Monday low. If that's then lost, then I think we're into that 421s and then maybe even 410s. But if we can hold the 100 MA, if we could get above the Fed day range, then I'm thinking 50 MA and maybe even 20 MA. And I think if the bulls can then get the 50 MA, maybe have a little bit of a back off and then run, we could see back to the all-time highs. So those are the scenarios I'm seeing, and I'll illustrate that in more detail for you in the midweek video. I was hoping to do some Q&A with this. Unfortunately, I can't see comments because of, I know you can do it on YouTube Live, but I'm not seeing it on my mobile version here. That was really more the reason for doing this, so that I could do some mobile Q&A. But I'll tell you what, for a couple of minutes, if you want, I'm on Twitter right now. If you want to give me some questions on Twitter, I'll answer them. So if you go into the post that I posted this on, and you leave if you write a comment, I'll take questions. So if you want to do that now on Twitter, I'm looking at the stream as we speak. So if you want to go in and ask questions, if not, we could wrap it up here. But I'd be happy to take some questions. So shoot. I'm not seeing any responses yet. I guess it takes a sec to go over. I don't know what the video delay is on this. No questions. Is that the case? There must be. I always get them. It's so annoying that this got screwed up the way it did. I was really looking forward to a better Q&A and on this than that. Let's see. All right, so I'm not seeing any questions come in on the tweet. So, has the Fed lost credibility? Okay, so I don't know that I would say the Fed has lost credibility, because I don't know how much credibility the Fed ever really had, to be honest. I always hear a lot of talk on TV about the Fed losing credibility. It doesn't matter. It matters what they do. They control the money supply. They control interest rates. So if the Fed wants to get markets higher, they'll do it. We saw that right after the COVID crisis. I've heard this, I don't want to mention anybody, but a couple of guys on that, show that airs sort of at 5 o'clock after the market, that I almost was on. I'm so glad I wasn't. I'd be so tainted if I feel I would be tainted if I was associated with that show. But no, I don't really think the Fed has lost any credibility here. I would say that their reputations might be dinged because of the investment thing, but as far as the markets responding to what the Fed will do, I don't think that that's damaged in any way. Are there any more questions? If you'd like to ask questions, you can go to my post and then just ask them there, and I'll reply. I'm so pissed that this got screwed up today. It would have been so much easier on the Twitter, because it was just like Periscope. You just type it right in the chat, and it would be right here. But I'm not seeing any more popping up immediately, so we'll end it there. I'll make this video available if you missed it on both my Vimeo site. I'm assuming it's going to save on my YouTube also, so I don't really use that channel very much anymore. I may start again, but that's where the videos will be. Have a great rest of your week. I'm going to start working on the big video now where you can see the charts, and I'll post that link later on this evening. Thanks for coming. I appreciate the participation. I don't know what happened with the Twitter today. Hopefully that technology gets fixed. I'm going to play around with it, and hopefully we'll nail that down. Cheers.